Gold starting to hit these support levels. What's the word out there?
Sure. So you have a couple factors that are supporting gold right now. You have economic surprises are starting to roll over and go into negative territory. You have the dollar starting to hit some resistance levels that you saw back in mid-2012. And then you've had the announcements from Japan, how they're doubling their balance sheet. The U.S. is still on the same kind of track with easy monetary policy. So all those kind of factors right now are still kind of filtering into, layering into support for gold.
Kyle, you going for gold?
Yeah, we've always had a position in gold. When you think about the largest central banks in the world, they've all moved to an unlimited printing ideology, right? Monetary policy happens to be the only game in town. I'm perplexed as to why gold is as low as it is, but I don't have a great answer for you other than you should maintain a position.
George Soros told the China Morning Post either last night or the night before that he'd lost interest in gold because it proved in the most recent I believe Cyprus episode of the European crisis not to perform the way that he anticipated. And as a result, it's sort of lost its luster for him.
Yeah, well, George has been a much better investor than I over the years, but I would...
He's been at it for longer.
Yeah, and I think that, look, when you think about the global monetary base, as Andrew just alluded to, the global monetary base, is north of 70 trillion. All the gold in existence is around 7 or 8 trillion. There might be $1.2 trillion, $1.3 trillion of investable gold. At some point in time, I'd much rather own gold than paper. I just don't know when that time is.
And do you feel at all times you just have to have a presence in gold? It's just a matter of, listen, if you're going to be invested across asset classes, you simply need to have something there.
No, I just think they can't print any more of it. They can mine some more, but they can't print it at the rate the central banks are printing. I just view gold as another currency. It's that simple. I don't view it as a commodity.
Andrew, how do you expect gold to trade in the weeks and months ahead then? On what basis? On the basis that it is going to be viewed once again as a substitute or perhaps even a genuine currency, an inflation hedge, a hedge against systemic risk?
Right. I mean, if you think about inflation expectations have remained relatively anchored. If you look at 5- and 10-year break-even spreads, despite the Fed balance sheet expanding to record highs, you've had, as I said before, you have these negative economic surprises filtering in, so the safe haven trade is kind of maybe coming back into play. From a consensus perspective, the analysts are really looking for a flat gold price over the next couple months, even maybe increasing. It's a seasonally stronger period that we're entering for gold right now.
If you're thinking about gold as a currency and we're in this flight to quality, safe haven mode, do you want to own gold rather than U.S. Treasuries?
I do. But, if something like happens in Japan like we think it's going to happen, I think U.S. Treasury nominal yields will go negative in a flight to quality. So maybe gold moves up. Treasuries actually get a much stronger for all of the wrong reasons, not as endorsement of U.S. fiscal policy because it's the only place money has to go.
But isn't the market doing well across the board for all of the wrong reasons? It's all about central bank intervention. Fundamentally, if you look at the macroeconomic environment, things look horrible.
Yeah, I mean, look, if monetary policy is the only game in town, then we're all in for a world of trouble, and that's the way we see it.